Welcome back. Happy Wednesday afternoon. Brace for impact because the Federal Reserve just dropped a big, huge bomb. We're nowhere near the bottom is in. Some is saying that we're in the bottom phase, but obviously we're not because we have shredded from Monday to today over 1,000 points. Excuse me, but not as aggressive as we did prior to when the president was going off with the tariffs. So looking at Nasdaq, we have seen that previously we pushed up and we pulled back and we found that support around 1700, and this is where we're looking to find a support. But before we get into that, let's just scoot over a little bit on some economic data. What's fueling this? What's causing this? So this morning, if you have watched my channel, you'd have seen that I updated and informed you that at 8:30 retail sales was out and retail auto sales was out, and both are higher than expected. Coming in, retail is 1.4, 1.3 was expected, and 0.5 comparing to 0.2 that was expected. So because we never met those numbers, what it means and what it's telling the country that, hey, there is less spender right now. Why? Why there's less spender? Why there's more spender? So we expected this to be up. Of course, it came in up, and again, retail coming way more than expected, and this is what caused a significant drop this morning. We were selling off about, like I would say, like 600 basis points on the day, and then the Federal Reserve came in and said, "Hey, this is what's going on because of the tariff. Chances are they have no control over inflation because if someone really needs something, they're gonna go ahead and buy it, even though the price is higher. They're gonna still buy it, and what's that's gonna cost? More money allocating in the market, and with all these money allocating in the market, it's just gonna boost inflation. So there's nothing they can do. This is out of their control. The president have to step in at this point and fix this by negotiating with China, and soon and pretty soon, just like we saw on the 9th of this month, when the president came out and he said, "Hey, I'm gonna put a pause on tariff for right now," and look what happened. Market went from lows to 3 months high in one day, over 2,000 points. It was the most one of the most volatile day we have seen in history, in the US stock market history, because the market pushed up over 2,000 points on that day, but it wasn't significant enough because, again, news were back and forth with China that the tariffs, they just keep bullying each other. Donald Trump and the president or the governor or whatsoever rules or government China use was back and forth with that. So with that said, market is pricing in now what the Federal Reserve just released, and we definitely can come back down to these lows. But I can tell you for sure, I am going to buy the dips. Why I'm buying the dips? When the president decides to release any news again in regards to tariff and market pushed up and market push up over 2,000, 3,000 points, I want to make sure that I am in that scenario, benefiting from it. Because the last time I did not benefit. While the market was selling off, yes, I benefit from my SQQ shares, but I gave back some of it. And 10-year Treasury yield posed a huge impact on the market, and we can see that we were trading at like 10 point, 4.40, 4.80. These are the numbers that we were seeing prior to this because China was getting rid of some of their money in the United States in the bond sector and stuff like that. So it caused the 10-year Treasury yield to rise, but we're slowly coming back down, and that's also good for Nasdaq because once the 10-year Treasury yield comes down, then the tech stock act in reverse to that. So that's something that we're looking forward to. But again, earnings are here this week. We're looking towards a lot of earnings for the rest of the week. And also, where economic data is concerned, we're just looking tomorrow for initial claim and continuous claim. These two are continuously going to go up. So tomorrow, This can bring another pullback into the market because if you notice that we have been doing nothing but increasing where prior it was 223k. I'm now and last time it was 2, so no, so 223k, and prior to that it was less. It was like 219, and what it's expected is 225k. If we go over this, I can tell you we can see another 1,000 points, 2,000 points pull back tomorrow. But I'm not going to be scared or worried about that. Why? Because I'm going to buy in for the long run. A year from now or 2 years from now, I guarantee you, if you put in a 20k, 100k, or 50k, or 200k, or $500,000, you can definitely see tremendous return 2 to 5 years, 2 to 3 years from now. Because I guarantee you that this is not going to be around for a while with all these tariffs information. And this is, I cannot agree more that this is more than oversold pricing in the market. With a market like this, with tech stock like this, with AI fluctuation like this is super, super nice view of a stock, of any stock that's there possible. And you have to take into perspective that most of these pullback is deliberately. This is how the rich get richer, and this is how the wealthy get wealthier. If you can look at all the AI tech stock, their majority of the stocks are down now. So SMCI is one of my favorite play, and also AMD, because when AMD goes down, it rock the next day. So I'm looking forward